Have you ever wondered how a company prepares to invest hundreds of millions in multifamily real estate? Welcome to the Multifamily Real Estate Insights Podcast. I'm your host, Sandy MacKay. Let's get right to it. Today, we're diving into a fascinating development in the world of multifamily real estate investment. Peakhill Capital, a firm that's been making waves in the industry, is gearing up for a substantial investment spree. According to a recent article by Matt Lamers from Green Street News, Peakhill is preparing to deploy up to $600 million on multifamily assets across Canada and the United States. This ambitious move comes on the heels of Peakhill's successful completion of a $225 million inaugural bond issuance. This bond issuance is a significant step for Peakhill, as it provides the firm with the capital needed to expand its portfolio in the multifamily sector. It seems that Peakhill is positioning itself to take advantage of opportunities in the real estate market, particularly in the multifamily segment, which continues to show robust demand. While the article doesn't specify exact locations for these investments, it's clear that Peakhill is targeting key markets in both Canada and the U.S. As we know, the multifamily sector in cities like Toronto, Hamilton, and other parts of Ontario, as well as major U.S. cities, offers tremendous potential for growth and returns. This kind of investment is a promising sign for the multifamily real estate market. It reflects a growing confidence in the sector's stability and potential for long-term returns. For investors and developers alike, this could be an exciting opportunity to watch as Peakhill moves forward with its plans. Ontario's rental housing market is facing significant challenges, as highlighted in a recent report by the Ontario Real Estate Association. The report, titled "A Fair Rental Market for a Stronger Ontario," calls on the provincial government to undertake substantial reforms to improve the rental landscape for families, students, and seniors across the province. The report outlines 20 action-ready and long-term recommendations aimed at creating a fair, functional, and balanced rental housing market. These include reviewing and modernizing the Residential Tenancies Act of 2006 to better reflect today's rental market conditions, improving affordability, and ensuring a fairer system for both small and large landlords. One of the key suggestions is to support mediation services between landlords and tenants at the Landlord-Tenant Board by exploring models similar to British Columbia's Residential Tenancy Branches Facilitation Services. The report also advocates for moving away from the digital-first strategy at the Landlord-Tenant Board to improve efficiency by restoring in-person hearings as the default, while still offering a virtual option. The Ontario Real Estate Association also calls for targeted tax incentives for small landlords in good standing who offer new rental units in growing markets. This approach aims to ease pressure on tenants while encouraging responsible property management. The report stresses the importance of a rental market that maintains the path to homeownership open for all who aspire to it. In a survey conducted by Abacus Data on behalf of the Ontario Real Estate Association, over half of respondents indicated that they view the rental market as unbalanced, with high rental prices, limited availability of suitable units, and poor property conditions being the main obstacles. The report highlights that the dysfunctional and backlogged tribunal system is failing both tenants and landlords, with only 32% of respondents expressing satisfaction with dispute resolution at the Landlord-Tenant Board. The Ontario Real Estate Association's recommendations aim to rebalance the rights and interests of landlords and tenants, while supporting a strong, stable housing market. As noted by Ontario Real Estate Association CEO Luigi Favaro, these policy solutions represent a crucial opportunity for the Government of Ontario to address the pressing challenges in the rental market, providing accessible and timely dispute resolution and protecting tenants from bad faith evictions. The report makes it clear that bold action is required to build a rental housing system that works for every community across Ontario. If implemented, these recommendations could deliver diverse options for tenants, support housing providers, and strengthen the housing market as a whole. The Ontario Real Estate Association believes that these reforms are essential to ensuring Ontario remains a place where families can grow and thrive. As we continue to explore the multifamily real estate landscape, let's turn our attention to the latest housing market reports, which provide both historical and forward-looking analysis. The Canada Mortgage and Housing Corporation, or CMHC, offers in-depth evaluations of market conditions, emerging trends, and unique insights into major metropolitan housing markets across Canada. These reports are invaluable for investors and developers looking to understand the dynamics at play in the housing sector. One of the key resources from CMHC is the Housing Market Outlook, which provides a forecast for Canada's housing market through to the year 2025. This report is essential for those seeking to anticipate market shifts and align their investment strategies accordingly. The Fall 2025 Housing Supply Report offers the latest insights into new housing supply in Canada's largest metropolitan areas, which can be crucial for understanding the availability and demand for multifamily properties. The Housing Market Insight Report delves into analysis and information about the housing and housing finance sectors. This includes data on starts, completions, prices, and more, providing a comprehensive picture of the market's current state and potential future developments. Additionally, the Northern Housing Report sheds light on affordability and housing market conditions across the three major centers in the territories, offering a unique perspective on these often overlooked regions. For those interested in monthly updates, the Housing Information Monthly provides a wrap-up of essential housing data. This includes detailed statistics on market activity, which can help investors stay informed about the latest trends and opportunities. Also, the Housing Market Assessment identifies conditions that may signal imbalances in selected census metropolitan areas, offering critical insights for risk assessment and strategic planning. The CMHC's Market Insights team, led by Chief Economist Mathieu Laberge and Deputy Chief Economists Aled Abyorworth, Kevin Hughes, and Tanya Barasa Ochoa, plays a vital role in providing these insights. Their expertise in house price trends, supply challenges, and other factors impacting housing markets is instrumental in shaping a comprehensive understanding of the real estate landscape in Canada. For anyone serious about investing in multifamily real estate, these reports from the CMHC are an indispensable resource. They offer a wealth of data and analysis that can guide decision-making and help navigate the complexities of the housing market. By staying informed with these insights, investors can better position themselves to capitalize on emerging opportunities and mitigate potential risks. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.